and you're wanting to add order flow into your trading, sort of to, I get a lot of people that come to me and say, hey, I want to add order flow to help refine my entries, refine my exits, find potential turning points in the market, um, and confirm that, the trend is that we're in is legitimate, right? I mean, that's, everyone always says the trend is your friend, but, how do you know when the trend is over, right? I mean, like with, just this last week with Tesla, right?
Right.
Um, it's who knows where Tesla's, somebody was saying, Tesla's going to 5,000, 7,000, you know, and it sort of reminds me of what was happening with Bitcoin, a couple of years ago, where it's just like this parabolic increase going on. And, you see, you want to be able to find these turning points, when the market has potentially topped, because, like the last couple of days, everyone is just jumping on Tesla. Oh, I bought one. Oh, I should have bought more. So they start buying more. Then all of a sudden the market sells off a little bit and, their big winner turns into a big loser. So, there's ways that people use order flow to sort of help manage their trades. I mean, for me, you know, order flow changed the way I looked at the market. We're so used to looking at a market, for example, right? Like this is the E-minis right now, okay? But most people, are fixated on price and basically and price alone. Well, price alone by itself is just one piece of the puzzle, right? If imagine, right, if you've ever ran a business, whether it's selling stuff on eBay or having a shop or something, you realize it's not just price, right? You're going to be looking at the quantity you transact at a price, and for me, the market is the same way, right? I'm curious to know what transacted at a price. Was that price accepted, or am I priced too much, or am I priced too little? I'm selling everything out, and I gotta constantly be getting more supply, or maybe I'm not making what I should make. And I always tell people put order flow into everyday context, right? And the best way to think of it is, um, you're going to go to the store, right? You got a list of groceries, okay, things you have to buy, but then there's going to be items that you're going to see on sale that maybe I don't need it this week. It's not an urgent thing, but if it's on sale, if it's priced cheap, yeah, chances are you'll buy it, right? Because you'll know you're going to want it, maybe not tomorrow or the next day, but maybe the next week, um, that you can buy it. And so you have it, and you feel like you're getting a deal, right? You're buying something inexpensive. I know myself, sometimes I go to you go to the store to buy something, you come home with three different things that, aren't even on your list. Why? Is because, you bought it cheaper, right? And it's a good deal. And the market's the same way. So just by looking at price by itself, right, you have to take into account, if something is cheap or expensive. And imagine you go to buy a car, okay? You know what you want to pay for the car. And, if it's too expensive, you're not going to buy it, right? If it's very cheap, honestly, you're probably going to think something's wrong with it. But when it comes down to you need the car, you got to start negotiating, and that's what the market is. That's what it's all about. Now, with order flow, okay, let me just pull up these slides here real quick. Okay, well, first, for those of you that are new to me, Tom, I met Tom a few months ago, but just a little bit of background about myself, right? I've been in the futures industry since the early to mid 90s. I think 94 is when I started on the floor, CME floor, as a runner with Dean Witter Reynolds. um, it's basically the lowest level that you can start at in the futures industry as a runner. And what you would do is, the guy on the phone would take an order, write it down, hand it to you. You got to run it out to the broker in the pit, and that was it. Right? That was that was the job. But that's how people got into the industry, before, then you have a career progression, right? You do that for a few months, then then you start getting on the phone. Then the next progression is being a standing in the pit. Um, eventually, if you're good enough, you can become a filling broker, or you're going to become a local. Um, Nowadays, you don't have that low barrier to entry. What you do have is a low barrier to entry to opening a trading account. Anybody could open a trading account. And now with these micro contracts, it doesn't even take a lot of money to open an account. Before, brokers wouldn't open an account unless you had at least $5,000 and a steady job. Now brokers, you could open an account with $200. Um, so it's got a very low barrier to entry, and a lot of people think that I could become a trader. Well, it's not that easy. It takes common sense, but you're not going to think that you're going to become I don't want to say a doctor like overnight. There's a progression you got to go through with education, and trading is a bit the same way. Some people are going to take to it a lot faster than others, um, but for me, I realized my progression was if I wanted to be in this industry, because before when I got out of college, I had wanted to be in the industry, but I didn't know really how to really get into it. I thought, well, I'm just going to, I've got some money saved. I'm just going to go down the exchange and become a local. Okay, well, I realized, that's probably not the best way to do it. I wanted some sort of education. So that's why I figured, well, I'll just go start at the bottom and sort of work my way up. So after that, electronic trading back in the early 90s started taking off. So I left the trading floor to go trade on the upstairs trading desk and trade Globex, Project A, which was the CBOT, and NYMEX Access. I thought that was it. I thought that that's the only markets I'd be trading. But then the whole world opened up, right? I was able to trade Europe. I was able to trade Asia. I was able to trade South African markets. So when you're on the floor, basically you're just looking at one or two markets, right? I was just looking at the Deutschmark and the Swiss franc at the time. But when I left the trading floor to go upstairs on the trading desk, all of a sudden I was watching not just Swiss franc and Deutschmark, but I was watching all the products on the CME, all the products on CBOT, all the products on NYMEX, COMEX, and then all the exchange traded products around the world. In Singapore, the Nikkei, Japan, the Nikkei, the Topix, JGBs. In Europe, you had the DTB, which was the Bunds, DAX, Euro stocks, all those. Then obviously everything in London. You still had big exchange in Paris. And so I really started to get more exposure to what really the futures markets were going on around the world and how they affected everything else. So after Dean Witter, I left there to go join EDF Man, which is an English trading company, right? They've been around since the 1700s, and they trade commodities, right? And did that for about 2 years on their trading desk. Then I went to Commerzbank. I got my license to trade Eurex Bunds. In those days, to trade Eurex outside of, well, in Germany, then they made it for the rest of the world. But to have a Eurex terminal in front of you, you had to take an exam, and it is a very difficult exam. And in Commerzbank, right, for new trainees, they get 1 month to study for the exam. If they don't pass that exam, then they don't have a job anymore. So in Chicago, I had to take that same exam, and I nearly failed it. But it's like you don't get a study. It's not like the Series 3 or even the 7. In this one, you really got to know like advanced math and all sorts of stuff. And you got to do math equations, and you got to really put the answer out 3 decimal points. So you can imagine you get one wrong, um, that's the end of it. But it was nice to go through, nice experience to go through. At that time, I was only one of about 5 people in the United States that had a Eurex license to trade Eurex, trade the Bunds and DAX. Those are the two big ones at the time. And then after that, I joined Cargill, which is also a big commodity trading company, and they sent me out to Singapore. And I was with Cargill for 4 years, and I joined JP Morgan. And JP Morgan, it really sort of galvanized everything that I had learned up to that point. That was in 2005. At Cargill, right? The thing that I learned most at Cargill is sort of the supply chain, because Cargill, being a commodity uh, based firm, has everything in the supply chain, um, from shipping to things growing in the ground to storage, um, even to to actual trading, and obviously they're big grain traders. So when I got to J.P. Morgan, it was just like now I could really be unleashed, because I was in Singapore, being an American. JP Morgan was just getting into commodities at the time. It was a commodity boom, and they needed someone with commodity experience, because people in Singapore, the only commodity experience that they have is just palm oil and trading TSR rubber, rubber for the tires, which is big in Thailand, but the trading happens in Singapore. So they had nobody with experience in commodities. So when I got there, I was there to help build up their commodity trading business. And at that time, JP Morgan was mainly only in bonds. We had started shifting into more of trading equity indexes in the region. So it was a great time, because I was also able to trade both commodities and in the indices um, in the region as well. But the one thing that I realized was I was all of a sudden now seeing these tremendous flows, through JP Morgan, and I could see the impact, right? Because yeah, before I was trading decent size, and I know it would have an impact of the market, but pretty much every trade, every ticket that I was touching at JP Morgan is going to have an impact on the market. And even something as small as 100 lots in cotton is going to move the market. There's times where I would move the market limit up in cotton based on some news that was happening in China. This is on the overnight session. Um, that I could just buy 50 out of the 100, and I would turn the market limit up. So obviously, that's when I started putting the pieces of order flow together. Then in 2013, I left JP Morgan after my daughter was born, just because I was spending 12 hours a day, 11 to 12 hours a day in the office, and I realized that's not what I wanted to do with my life. Right? I realized there's more to life than working all day long, and then I started writing my book, Trading Order Flow, which I'll show you. I'll give you guys at the end of this presentation. It's you can download it. I'll show you how to download it, so at least you get a better understanding of order flow. And I was just trading for myself, and of course writing my book. But then I realized, I wanted something, a computer program that would help me analyze the order flow. Right, the existing order flow. I was using an order flow software out there, which just gave me a basic volume footprint chart. And, while that's nice to have, I wanted something else that the computer would help me analyze the order flow. Okay, because there's certain instances in order flow that are very revealing to a trader, right? But you have to know what to look for. And sort of the whole concept of creating my own additional software is to help me with the analysis, right? Because I'm not saying I'm not claiming to invent a footprint chart or order flow or anything like that, but I want to take it a step further and let the computer do analysis for me. Now, this is an order flow footprint chart. Okay, now there's a debate that goes on with people that use a trading dome, right? We're all familiar with what the trading dome is, right? This dome is the price ladder, right? It goes up and goes down. You can buy or sell off of it. Um, but what you're seeing in the dome is bids and offers that are working, right? That people are willing to buy it at a certain price and sell it at a certain price, versus the difference of a footprint chart shows you what actually traded at that price and the volume that went through. Okay, and for me, there's a distinct difference. There's commitment, which is what people actually trade, and there's non-commitment. There's people that are just, well, yeah, I'd buy it if it comes down here, or I'd sell it if it goes up there. Well, yeah, if the market is trading, um, this is NASDAQ. Let me just flip it to crude E-minis. It's a little slower. So, the market's trading 33.22 and a half, yeah, of course, there's 600 offered at 24. Of course, you'd love to sell it at 24. You're not going to do that because you got a lot of size going up, to get to that level. But yeah, if I could sell it at 24, I'd be happy to. Now, so people that trade on a dome, they have a different mentality. They're looking at what's being placed in, what's being removed, and what's going through. But the problem is with the dome, you really got to be, on point, right? You got to know what to look for, and you really got to be sort of glued to your screen. Some markets move slower. This is E-mini S&Ps right now. At times it's 1020, so it's a little bit slower. A faster market like say Nasdaq can be, well, right now it's kind of tame, but you watch it at the cash open, and it's just going berserk. It's up and down. You can't. Sometimes it's moving so fast you can't even see the price that's being traded. And to me, that's not really useful information. But when I look at a footprint chart and I see, okay, at this level, this amount traded, at this level, this amount traded on the bid, this amount traded on the offer, I can see where there's imbalances appearing in the market. I can see like in the bar, for example, right off this swing low here at, about 940, was that about 942? Right after that, I can see the next bar is a big green bar. Okay, that's good. I can see there's aggressive buying. There's buying imbalances in the bar. That's what these blue numbers are. Red numbers would be selling imbalances. And to me, that's very valuable information. Imagine you're at a swing low right here. Okay, market starts rallying, and you can see aggressive buying coming in. Well, anytime you're at a higher low, you want to be asking yourself, are we going higher or are we going lower? And if there's signs that hey, we're going to rally up off this low, then it's going to give you, a pretty safe entry, right? And what are the signs going to be? Well, you're going to see aggressive buying, coming in, and you're going to see it in the delta, right? So you're going to see imbalances. You're going to see positive delta. Now, for those of you that again are really fresh to order flow, I'll just go over a couple of the basic concepts of order flow really quick. There is the way the markets trade. We all know this, right? There's a basic, it trades in a two-way auction. There's a bid and there's an offer price. So for example, 29.55 and a quarter is the bid, offered at 55 and a half. Now, once you understand that part, you're going to understand that there's two different types of traders, right? Not everybody trades the same way. You're going to have passive traders and you're going to have aggressive traders, right? Passive traders are the traders that are sitting on the bid in the order book, right? Or they're sitting on the offer in the order book. They're not lifting their offer. They're not buying at the market. They're not selling at the market. They're bidding a certain price or a lower, or they're trying to sell it at a certain price or higher. They wait for the market to come to them. Now, aggressive traders, these are the ones that cause the market to move, right? They don't wait for the market to come to them. They trade at the market. They sell into the bid. They sell into the offer. If they see the market is 55 and a quarter bid offered at 55 and a half, and they want to sell, they're going to sell it at the market at 55 and a quarter. Or if they want to get long, they're going to buy it at the market at 55 and a half. They're not going to work a bid at 55 and a quarter in order to get long because they may not get it, right? They're not going to get filled. They're not being aggressive. And the best way to think of it is going to a car dealer. You want to buy a new car, the new Chevy Corvette, right? You go there, you see the sticker price is, whatever it is now, $65,000. Okay, well, you don't have 65,000. You got maybe 59,000. Okay, the dealer is going to say, well, this is the price. It's 65,000. Well, you're bidding 59,000. He's offered at 65,000. Now, if you really want the car, you're going to find a way to come up with that difference, right? You're going to find a way to come up with the 6,000 to buy it at his offer price. Now, if the car dealer says, thinks, oh my God, I got a lot more Corvettes coming in next week, I got to get rid of it, maybe he'll be aggressive and he'll sell it to you at your bid price of 59,000. He'll say, what can you do? Well, yeah, best I can do is 59,000. Okay, I'll sell it to you there. So this time the car dealer is the aggressive seller. He's the aggressive trader, right? If you bought it at the sticker price, you'd be the aggressive buyer. So, not all buying and selling is the same, right? You have aggressive buyers who buy from passive sellers. You have aggressive sellers who buy from, or aggressive sellers who sell to passive buyers, right? So once you understand that, you could start to interpret an order flow chart. Okay, so there's three parts of the order flow chart, the three building blocks rather, not three parts, that you have, that all of order flow analysis flows from, no pun intended. You have delta, imbalance, point of control. Each bar is going to have a delta. Each bar may or may not have an imbalance, but each bar will also have point of control. So let me just walk you through these three things really quick. The delta is the net difference between aggressive buyers and aggressive sellers. And delta on most order flow charts will appear at the bottom. Some will have it actually above or below the bar, but the majority have it below the bottom. I'm showing you charts generated from my software, the Order Flows Trader software. We have ours along the bottom, and you can see, like, if a bar has a negative delta, it's telling me that sellers were in control, aggressive sellers were in control of that bar, that the bar ended with net aggressive selling. Okay, if you have positive delta, it's going to tell me that the bar has buyers in control. And there's also another term, another subset of delta. There's what's called the max delta and min delta. Now, max delta is the most positive delta was in the bar. So it shows you how strong buyers were in a bar. Min delta is the opposite. It shows you how strong at one point sellers were in the bar. And there's another one, which is cumulative delta, which is your delta throughout the day. But the main one, the headline number, is delta. There's ways to interpret max delta and min delta for finding reversals. But for now, I'll focus on delta. So that's what delta is. So generally, as the market is going up, why is it going up? You have people lifting the offer. People are buying at the market on the way up. And on the way down, you're going to have aggressive sellers in control, people selling into the bid, clearing out the bid, hitting the next bid, clearing out that bid, going down, 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 down. So you're going to end up with positive delta on moves up, negative deltas on moves down. Now, that's not always the case. There's times where a market may move up slightly, may have a couple bars, green candles going up with negative delta. And I'll talk about that a little bit later, but because that's also a good clue into what's happening in the market. Now, the second one is imbalances. And again, we talked about earlier, a market moves in a two-way auction. There's volume traded on the bid versus volume traded on the offer. And when you're looking at a chart, right, you're going to always be comparing what was traded on the bid versus what was traded on the offer. So if there's a difference, usually greater than 4-to-1, you would consider that an imbalance. Some people use 10-to-1, some people use 2-to-1, but the industry standard, so to speak, is about 4-to-1. Majority of people I know use 4-to-1. There's people that have developed their own trading plans based around strictly imbalances, and they're looking for imbalances. One guy uses 10-to-1, another guy uses 6-to-1. But you can see in the bar, like this green candle right here, right, you got 3 against 257. 257 is red, right? That's telling me there's a selling imbalance, right? When the market was bid 58.59, only 3 lots traded at 59, 257 traded at 58. Just as down here on the bottom of this green bar, you see a couple blue numbers, 157, 115. They're against zeros, so I know this market was probably moving up pretty fast because I got no counter trade going on here. But 0 against 115 obviously is more than 4-to-1. 0 against 157 is greater than 4-to-1. Now, the last piece is point of control. And that's simply the price level in a bar where the most volume traded. And it can act as supply or demand over the next bar or series of bars, right? Imagine you can tell the direction of a market just by looking at one price point inside of a bar. That's what point of control is going to allow you to do. And there's times, this is what I talk about when I say, a computer can help me with my analysis, is there are times when it's very clear that a certain level in a price bar is going to act as support or resistance, and my software I created a little thing that will highlight those particular point of controls where the market is going to react off of. So, just really quickly, I'll just take you through a couple examples just this morning here. This is the E-minis. Now I talked about, right, we hit this little swing low here around the 12 area this morning here. Right, 11 and 3/4, right? 45 lots traded there. Okay, nothing special. I see cumulative delta, right? This third number down here is showing 3970. Okay, it's a positive number. Okay, but more importantly, if I'm looking at the delta, the cumulative delta, think of it, it's basically like your volume for the day, but in terms of delta, right? So it's telling me, so it's going to go up, it's going to go up and down, right? I actually have this little tool. If you use NinjaTrader and you have a paid version, they have this tool as well for free on a paid version, but it's telling me, so I know that I'm at a swing low just by looking at it. But if I was just looking at the delta, okay, 3970, and I can see how the cumulative delta is stronger earlier, 79, 7100, 7500, 7300, then 5300, 5000, 4000, 5000, 4000, 3000, 970. So I know that there's been some selling going on because we're at a stronger positive delta here, 7,500, now only at 3,900. So, okay, selling is going on. So I know that on this move, obviously we got negative deltas headlining right here. So I got this swing low. I'm at my lowest recent point in cumulative delta. And then, okay, so I'm thinking, but this bar it's a green candle, right? Market is starting to turn around. Okay, so is this the beginning of a potential reversal, or are we just going to pause and fall over and sell off? Well, this bar by itself isn't really giving me any particular clue. So I look to the next bar, okay, and what do we see? We see strong positive delta, 1957, right, which is very strong, right? Most of these other bars, you're looking at deltas in the 300s to 400, right? There's 375, 646, 324, 193. This is the big one, 1900, okay? 320, 311, 358, 705, 436, and boom, the buying comes in. I see buying imbalances in here, 1, 2, 3, 4. 4 buying imbalances, okay? It's telling me aggressive sellers are coming in. And if I look at the point of control on this bar on the low, the point of control is coming in at 3312 and a half. Now, this next bar, it got one tick below that point of control. Put in a higher point of control, half a point higher. Obviously, it's trading higher. So this point of control is telling me that it's holding as a support area, right? Because the next bar is holding it. The next bar is, it trades lower, then comes back up. It's a doji candle. That's why it's not showing a green color or a red color. I see a couple selling imbalances in there. Okay, but it's a doji bar. And personally, I've found in my own order flow analysis, bars that open and close at the same level generally don't have much of an impact on the overall order flow analysis in the near term. Okay, so even though 4,000 traded had a negative delta of 400, I know that we're pairing up point of control again at the same level at 3313. So what do I see? I see a point of control first at this low at 12 and a half, and then at 13 again it comes right down to that level. 13 it holds, starts trading higher. Next bar, of course, a higher point of control. You got one imbalance in there, a big strong positive delta, and the market gradually works its way all the way up. You get up to this level up here at 22. So it's gone from 13, whatever this is, 13, 13 to 15 area in here, all the way up to 22. And I get up to this area up in here, and now I'm starting to see something in the order flow tell me, maybe this market has sort of reached, its level for the near term. This is a 1-minute chart, and I got a bearish point of control. That's what this point of control, this box here, that's magenta, right? That's the point of control. I highlight it if it's telling me that, it's going to be acting as resistance. It's colored magenta. If it was cyan, which is a blue, then it was telling me it'd be support. So this is where it's telling me, hey, you've ridden this. now you're seeing some resistance up here at 22, 22 and a half. So if I was long in here, this is where I'd be looking to get out, if I hadn't gotten out, already. But this is to me the sign that this market, does this move for now is done. Can it go higher? Yes, it can go higher. Can it sell off? Yes, it can go sell off. I'd be looking now for some signs of a potential sell off. Okay, I know that this move for now is, you got your 8, 9 point move here. Okay, market's going to pause or sell off or go higher right now. What happened is it paused. It went sideways, started working its way back up. Then I get this area in here. This is just a few moments ago, right? I'm going sideways, right? And what I said is, if you have a point of control that's purple, right, it's going to be looking as resistance. These blue point of controls is going to be support. Okay, where do I like to see blue point of controls? I like to see them at ends of moves down, right? Not coming right after a move up, get a little bit of a pullback, and then seeing like this, right? Purple, blue, purple, 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 blue, purple, right? I can see, by here, when I get to this point, to me, this is a market that looks like it's going sideways, right? Because I'm running up into this resistance up here, but I do have some support coming in here, okay? If I start seeing, a bunch of these bearish point of controls, I'm leaning towards the market selling off, right? If there was nothing in here like this bullish point of control, right? Then, oh my gosh, I got another one. Okay, well, why isn't this market selling off yet? There's questions you always got to be asking. If you've got a lot of bearish signs and the market's not selling off, then there's probably something deeper, like think of it like the ocean, like an undercurrent going on. You're getting these short-term signs that this market's sell off, but it's not putting in the sell-off yet. What's going on? And then boom, I get another bullish prominent point of control, right? And the market rallies up to a bearish prominent point of control. So there's really been nothing in here, right, telling me with conviction which way to go, right? I know a lot of traders always want to be in the action, right? And to me, the most important part of trading is learning to sit on your hands, right, and do nothing. So for example, just a little bit earlier, okay, so we have this move here, right, from the 28 and a half area, right? You got these 2 point of controls lined up. This is a bearish sign, okay? When share this with you. Generally, when you have 2 bars back to back, whether it's a 1 minute chart, a 5 minute chart, a 30 minute chart, and each bar has the same point of control, generally speaking, you'd be looking for the direction of the second bar, right, of near-term direction. So I know I've put in these point of controls up here. Between you got 1, 2, 3, 4 bars where it's coming in between 27, 27 and 3/4. Even this other bar at 27. So I know there's some volume going through up here, right? And that's why I said, talking about volume, I know that up here around the 27, 27 and a half area, there's people with supply, okay? Because I'm lining up these point of controls. And I said, there's a bearish sign here in the point of control. Next bar, you got 1, 2, 3 selling imbalances in the bar. I can see the deltas, right, in here. 51, minus 51, you're at your swing high here, but you got negative delta. Or if you're at a high, shouldn't you have positive delta, right? The bar before it, when you made that high, you had big, strong positive delta, 1100. Over the next minute, you couldn't build on that, right? You couldn't expand that delta. It settled at minus 51, which is nothing, right? If you're looking at this market right here, just scroll it back a tick. Okay, hey, we're going higher. Look at this. We got this big positive delta, 1100. We just broke out of this, this recent swing high. Looks like we're going higher, right? Well, if you break it down by the next bar, whoops. If you break it down by the next bar, what do you got? You've got minus, oops, that's not the bar, it's this one, minus 51 on the delta. Okay, well, we're not going to go higher when the bar turns down, it closes lower than where it opened, and you got, selling imbalances appearing, and you got negative delta, right? It's telling me sellers are in control, not buyers are in control. Buyers aren't in control right now. Okay, so that's not a good sign if you're getting long here. This sort of reminds me of, everybody with Tesla the other day, yesterday, I think it was. Everyone, I see a lot of people tweeting, "Oh yeah, I bought more Tesla at these levels," and then the market, then at the end of the day, they ended up losing because they gave it back. If you're getting excited, when the markets are rallying, we all get excited, but and we want to buy. I'll admit the same thing. I want to buy oftentimes when I see price moving fast. If my price is going up, that's probably not the best prudent decision to make. But if you're watching the order flow, okay, you know, he's telling you you should be holding off. Couldn't this be a pullback? Yeah, it might very well be. Okay, so there's no one putting a gun to your head telling you got to start buying it. Okay, where am I here? There we go. So the next bar, what happens? It works its way down. It starts trading lower, right? You got big, strong negative delta, minus 529. Now you're starting to see a couple more selling imbalances, 240, 897. Okay, is that a sign of a market that wants to go higher? No, it's not a sign. Okay, if you're still not convinced yet, right, wait for the next bar, which is this bar right here on the edge. You've got even a stronger negative delta, minus 715. So it's gone from at the high, minus 51, minus 529, minus 700. And what do you see? Each bar's got minimum of two selling imbalances. The point of controls, these two bars, they were lined up at 32, 33.27 and 3/4. Next bar, it's down here, right? And again, the thing you got to realize with point of controls is think of it as value in the bar, right? Because an area where the most volume is going to trade, generally is going to be the price that was most everyone was happy to trade at, where price was accepted. Generally, that's going to be your value area of that bar. So if we're putting in lower value areas here, the next bar is lower. You got selling imbalances coming in. You've got, you know, the aggressive sellers getting stronger. Well, what's the potential for the market to move? It got more potential to move down than up, right? And what happens is it just starts working its way down, 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 gets down to this area down here at 19 3/4. And you have a bullish prominent point of control. That's this blue area. So it's telling me that, we sold off from 27 and a half, 28 down to the 20 area, but buyers have stepped in to offer support to this market. This is where it's telling me, if you're short, this is where you're going to be looking to get out of the trade, right? Then you start seeing a couple more aggressive buyers stepping in here. You see this green bar with 1, 2, 3 imbalances, 1, 2, 3 imbalances. What my software does, this is what I talk about where, I wanted software that's going to help me with my analysis, right? Looking at a footprint chart or any chart is a visual exercise. And so I want to have extra clues. And that's what my software does. Most people that spend any time with order flow are familiar with what's called a stacked buying imbalance or stacked selling imbalance. And what that is imbalances, buying imbalances. A stacked buying imbalance is if you have 3 or more buying imbalances stacked neatly one on top of each other, right? And then it'll draw out like a green area like that. But I know that just because you have 3 stacked imbalances in a bar, that's important. But if you could have 3 imbalances, even if they're not stacked neatly on top of each other, it's still important, right? And as you can see here, right, this is nice, right? I like this type of stacked buying imbalance, right? You had this nice move down, then aggressive buyer step in. This is classic textbook order flow circa 8 years ago, right? You see this, you just automatically close your eyes and buy it, right? Because you're going to have a very low risk trade, right? You just buy that. Your stop is going to be below that buying imbalance, okay? And you got a nice move up, right? Even further along, you get another stack buying imbalance. But there's times where you're not going to get, you hit a swing high and you're seeing selling imbalances coming in, but they're not neatly stacked on top of each other. Well, does that mean they're not important? No, of course, they're still important. So what my software does is it actually puts a box around the bar just to highlight to me that, hey, you know what? You got stacked buying imbalances, right? Like here, right? You come into the swing low, I see a bar here with multiple buying imbalances, 1, 2, 3. Obviously, the next bar up, 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 and you run into some bearish things. Now, there's so many different aspects of order flow. Really, like 1 hour is not enough. But hopefully by now you could be able to um, start to understand a bit. Get a grasp of some of the basic concepts, and whether you're using a 1 minute chart. Personally, for me, people that say, hey, I'm a swing trader, can I use order flow? Well, for me, about the farthest I go out on an order flow chart is 15 minutes. Now, I know some people are working on some projects with order flow on 30-minute charts, old market profile guys that I know. Now that there's these micro contracts, they've got all these things where they're able to scale in and scale out of positions on a 30-minute chart. Me, I'm more of a shorter term trader. I've got a few hours in the morning to trade and a few hours in the evening to trade. I mean, right now in the evening times, Chicago time, 6 to 8 p.m. You're seeing very nice movements and things in contracts like the NASDAQ. I don't know how long these market conditions are going to last, with probably at least for the next year until the election. But you really got to find your footing on the markets, and what you're going to, how you're going to approach it, right? Not everybody's going to need order flow in their trading, right? I can't look at a chart, a plain bar chart, unless if it's a daily or weekly chart. I could look at a bar chart, but if I'm looking intraday, I want to know what's going on, right? Because there's information in the order flow, just like at this high, a simple little basic concept here, right? You see at this high, this bar, right? This box around the number right below this 30.33, it's telling me 6 slots traded there. Okay, so what do we know about this high? Well, it's the same high as the bar earlier at 906. The first time you hit it, it traded 358 on the offer, 16 traded on the bid. So it's telling me it was 28 and a half, 28 and 3/4 offer. Never traded 3/4 because I don't see any prints above 28 and a half. Then this bar closed. It's a minute-based chart. Okay, then the next bar opened. So it's still trading 28, but this time only 6 lots traded. So we're into the next time period, but there's very little interest at 28 and a half, only 6 lots trade there. So imagine, right, you're trading, the market's going up, you're trading 28 and a quarter, 28 and a half, goes bid 28 and a half, 28 and 3/4, but can't trade for whatever reason. Nobody buys the 28 and 3/4, right? No one's interested in lifting those offers. Sellers come in and start appearing in the next bar, right? It's 28 and a quarter, 28 and a half, only 6 lots traded. So in the next bar, there's only 6 contracts traded. There's market, what I term as a small print, is actually market exhaustion. Less people are interested in buying at 28 and a half. And then the market, I can see the aggressive sellers coming in 28, 282, 1178. Then I know at this point that, this high is probably going to hold in the near term. So then I start looking at what's going on in the delta, right? So we have this bar, high of the day, not high of the day, high of the swing, 1149, right, is the max delta. So, and we closed the final delta at 1144. So just 5 contracts off, between the max delta and the final delta. Then the next bar opens up. And at one point, it's got a positive delta of 233. Okay, so, but the market at that point isn't trading at the high. It's trading a little bit lower. But you have a max delta going on, right? So you got a positive delta in this bar. Okay, you know, maybe this market can go higher. There's some buying. We hit 28 and a half, came off a little bit. But what's causing this positive delta is when it's, 27 and three quarters bid at 27, sorry, at 28, there's a big offer at 28. Okay, that's why you got this big positive delta early, plus 233. And then the selling comes in. It ends up at min delta hits minus 591, final delta minus 51. So it went from a decent positive delta of 233 to a very strong negative delta of 591 before concluding at minus 51. The thing with minute-based charts is, after 60 seconds, that's it. New bar's got to form. So sometimes, where the final deltas appear, it's just time related more than anything else. So, if I still wasn't convinced, that this minus 51 isn't strong enough to convince me that, sellers are in control, if I'm not convinced yet that, the 282 selling imbalance, the 1178 selling imbalance, the 6 lots that traded up here, still wasn't enough, then, you wait for the next bar for more clarity, right? And then here you got a stronger negative delta, you got more selling imbalances, and the market proceeds to sell off about 7 or 8 points over the next 10 minutes, more or less. So like I said, hopefully by now, you guys should start to hopefully understand what's going on in the market by looking at order flow. So if you're interested in my book, right, just go to this page, orderflows.com/book.html. Right, it's going to ask you to put your email in, okay, and then you hit submit, and the next page will take you to the download page. It's a PDF, so you can download it for free. People say, why are you going to give this away? But it's when I started in the industry, I was fortunate that there was people that were willing to work with me and teach me things that they know, and sort of writing this book is my way to give it back, to people that are interested in order flow, maybe, don't really know where to start, and, and go from there. I mean, really, like I said, I have a YouTube channel that's got a couple hundred videos. Honestly, I haven't been able to post as many as I'd like to, just due to time constraints nowadays, but the market tells a different story each and every day that, you can really understand what's happening in the market. I mean, if you're just going to throw up a simple bar chart and, try and trade it, I think it leaves a lot to the imagination. I'd rather have pure something to hold, something to grasp that says, okay, this is why I'm making that trading decision, rather than an indicator says buy or sell. So if there's any questions, I'm sure hopefully there are.
Yeah, there is. Thomas asks, can you show us a live data analysis?
Okay. I just did, but let me see here. Where's my,
I think he's talking about like, what's going on like right now instead of like maybe 10 minutes ago.
okay, so, oh my, what time, where is this here? So, like, NASDAQ, okay, that's the wrong chart. This is my 30-second chart. So, NASDAQ, I like to look at NASDAQ on a 30-second chart. I used to look at it on a minute-based chart, but it moves so fast. Sometimes I'll pull up the dome here so you can just sort of get an idea of what's going on. So obviously we're going sideways here, right? I can see point of controls, 1, 2, 3, 4, basically around the same level. There's no real clue on what's going on. Now I see a bar here. You got 1, 2, 3. Let me open this up more. Buying imbalances. Okay, so one of the buying balance is gone. So obviously, as the trading is happening, obviously if there's a buying imbalance, it could come in, it could fill in the volume, it could disappear. So obviously I got a higher point of control, which is nice because the bar closed. Okay, so I see a 0 in here. So it's telling me this market came down to this point of control, rejected it, started moving back up. I got a higher point of control. Now I got a stacked buying imbalance. So it's telling me, there's aggressive buyers coming into this market, right? If I'm going to have a position on, you want to be long, right? You want to be going with what's happening in the market. Now, I don't want to talk about it too much, but my software, if there's a gauge that we have, right? If that's what these green arrows underneath mean, that it's telling me that there's either a market sweep going on in the market, or um, you know there's fast, I'll say fast buying, but like sort of the pace of the market is a bit aggressive. But you can see here, right, the higher point of controls, right? It came down to this point of control, got a higher point of control, higher point of control. Now we got a new higher point of control, more aggressive buying going on. So that's a fairly nice move. I'm not convinced. I'm not the type that's, oh, we're in this consolidating range here. And try and analyze. A lot of people say, well, if we break out of this range, you just buy it. That's simple. I don't need order flow. Well, okay. A lot of times you get these breakouts like here, right? You're trading in this range, you break out, you come right back in it, right? If you're trying to buy a breakout, I used to be a big breakout trader back in my early days. I used to love to buy breakouts, but you buy a breakout like here, then the market comes back into the zone. You got to cut it, right? You're not going to sit there and hold it, if you're a short-term trader. So order flow helps. You can see, obviously the aggressive buying in this bar, before you get the bar that pops up from 52 up to 60, and higher. Okay, so about
So
another
if you're
question.
so if you're not in a position now, what would you be looking at to enter here?
Well, okay, so now let's see here. Well, I mean, it still looks like it's going higher, at this point. I haven't really seen any reason to sell. A lot of people that watch my videos always say you're, contrarian, you're always looking to get short. No, after you have a move up, if there's a reason to sell, yeah, I'm interested to sell, but, it's still kind of bullish, right? I'll be looking at this level. If this level around the 59 area is going to hold, where you have this imbalance, obviously you've got this selling imbalance. Okay, so I'll talk about this right here, right? So you see green bars with selling imbalances. Now, it's more pronounced on longer term charts, but why do you have these green bars with, now it's starting to come off, right? We've got through this first point of control. This bar doesn't really have any selling imbalances. Here you've got, one only. You had a couple. It was flashing early, a bunch of selling imbalances, but I'm still not convinced that this market's ready to, sell off back down to 50. Now, why is this market going up on, you got green bar, green bar, green bar with negative delta, negative delta, negative delta, is telling me there's some supportive buying in here. There's passive buying. You had some aggressive selling coming in here, but it ran into that passive buying. So imagine you got 54 against 10, right? You got negative delta of 21. What's happening is there's bidders here, right? As the aggressive sellers coming in here, they're absorbing that, right? And you see the market pop back up here. This next bar just sort of tested that level, finally got through it down here. And then you sort of hit this other area in here. Don't worry about this blue area. This is some other indicator that we're working on that reads the order flow. But I know that's a little bit bullish. Now up here, okay, at around the 63 area, to me, this is a buying imbalance, in a red bar, right? Which is, buying imbalance is happening at 63. We're trading 60, 61 right now, okay? To me, if we start trading down, below the 60 area, meaning it's telling me, you had that last bit of buying going on here. If we can't sustain that, which we're not, so that means we'd need to start breaking down here below 60. Then I'd be looking, for a move down. But you can see it's coming right up in there right now, and then just going higher. But initially, right, this is when you look at order flow, right, you don't just take it on a bar. You also got to be analyzing what's happening in the next bar, right? So while this is a bearish sign, this stacked buying imbalance in this red candle, I need the market to convince me that, yeah, it's rejected those prices. If we can't even go lower than this bar, the low is what, 60, then yeah, there's no point in it. So, here you've got, what do you got in here? Here now you're just sort of going sideways. You got stacks selling imbalance, buying is coming right back up here. Don't worry about this red area. That's the opposite of this blue area. This is just something that we're working on right now. But yeah, right now we're just going sideways. It's not really. I had a potential to get short here, but I didn't start getting follow through in the next bar. I like to have movement, right? You're trying to trade with the market. If the market isn't going in that direction, why fight it? Don't swim against the current, so to speak.
And what are those numbers above and below each bar?
Okay, so the numbers above and below each bar. Okay, this is so like here's a one. Let me find a better something that's easier to covers more data. Go to crude. So you see here, right? There's numbers above and below. Right? Some are blue, some are black. These are just these are ratios that measure the order flow in a bar, right? This is when I first released my software. This was, sort of for me the big thing. And there's two types of ratios. One is a ratio bounds low, which is a number between a ratio. Again, it's a ratio. It's not actual numbers. It's telling me if there's support in the market in that bar, or if it's above a certain number, it's telling me there's price rejection. So you see like this bar right here, 35 is telling me there's price rejection, and it's a ratio above and below a certain number, right? And so you can see not every bar has one. If it's just a black number, like here, it's just telling me that's your normal order flow. And there's a certain way to use it. You're not looking at it on a bar by bar basis. Let me find a bar that's, find a market that's near or higher the low of the day, because that's really the whole point of it. Okay, well, this is one that failed. But this is a bullish ratio. It's telling me there's support here in the order flow in this market, and I have a divergence, right? I use the ratios in tandem with divergence. Divergence in the market, it says if you're at a new or equal low and you have positive delta, that's a divergence, right? Because you're at a low, new low, you should have negative delta. But I found, in my testing, this one failed. It just came down and made new lows, that if I have a divergence followed by a ratio, it could be a ratio bounds high low, a ratio bounds high, or a ratio bounds low, that it's got a very good chance of bouncing up off this low or coming off the high, and either, I don't want to say make a new high or new low, but oftentimes there's plenty of examples times where it does here, this low. So you had one that failed here. Here you got a low of the day. You buy it here, you get stopped out. Okay, you wait for the next trade. Now you can see here, this is the Bunds, right? You buy it here, 85, 86 in the next bar, all the way above up to where you got a bearish point of control. Now, I know some people that will watch these ratios during the course, as price is moving, just sort of convince them that, hey, this move is still, if they're long, like here, if you're long here, I see bullish ratios, blue numbers under the bars, that's good, right? If you're already in a position, you don't need to bail out of that position yet. So then you can see it hits that point of control and comes off to this one, hits that one, comes off to this one, goes back up. But that's what that is. Again, that's the part of the software. It's one of the settings that you can adjust. And the settings, it's something that, again, there's people that over the years have developed their own levels as well. It's simple. It's just a setting in here, ratio bounds high, ratio bounds low. I use 0.7. I used to calculate this on hand before I had the programmer put it in here. So, I mean, I could sort of do it in my head, but there's times where I had to do it by hand that I'd be looking basically for either price rejection in a bar or price support in the bar, especially at highs or lows. It's going to give me a high percentage trade. So that's what those numbers are.
It looks good. Well, Mike, we're a little over our normal hour, but that's fine. Give it a nice
Okay.
demo. Do you have anything before we wrap it up you want to say?
No, it's I said honestly, these are these markets never cease to amaze me. The way this markets have been just this first month of the year, and first couple of days. I tell you that Tesla thing, really, that movement was off the charts. And every year there's always something, whether it's Tesla, whether it's Bitcoin. Um, just don't get too excited in the markets. I always tell people, go at your own pace, learn at your own pace, trade at your own pace. I mean, like I said, you see a lot of people trying to jump in to moves when it's really not a good time to jump into a move. And I think order flow is something that helps people take a step back and look at the market. For me personally, just really quick, where's my Nasdaq chart? Where are we here? Well, so even higher. The Again, the difference again, whether you trade on a dome or a footprint chart or a regular bar chart, you got to find a way of trading that suits your style. Not everybody's going to trade the same way I trade. Not everybody's going to trade the same way you trade, Tom. You have to you have to find your niche, so to speak, on what your risk capacity is. And I didn't even talk today about risk, but if you can't if you can't sit in front of a chart, or a dome and watch the price go up and down and you're living and dying by each tick, then you should probably be looking to take a step back, and approach it from maybe a slower standpoint, or a different product that doesn't move so fast. But, in trading is a journey that I think that, everybody goes on. There's no final destination though. It's not like you get to the end and that's it. I never thought that, in my career, like, oh, this is it. I've hit JP Morgan, that's as high as I can go. I realized that was just part of my journey. Then there was this next step that, I want to go. And people say, well, why do you share? Why do you give your book away for free? Is because, you know, the the market is like a pie. Everybody could eat from it, right? It's not like, um, you become a successful trader, you knock somebody else down, off that ledge. No, there's room for everybody up there. So, just, find the parts of market analysis that resonate with you, that you can comprehend, and, go from there. And trading involves risk. That's the other thing. Don't trade with money you can't afford to risk.
I
People always,
guess most of the people in our community are doing, maybe swing or longer term
yeah.
trades. What, I mean, would you use like a 30-minute, 1 hour bars or for the order flow analysis if you wanted to help that type of trading?
Yeah, you can, like I said, if you're going to use order flow on a longer term, okay, I'll just pull up the buns real quick. I'll pull up a 30-minute chart. What am I here? 30-minute chart. Just give it a second. There's things in the order flow that can be at times, very revealing, very, can just sort of confirm that, either price is being rejected or, the market is, moving very fast. Let me just give you an example here in the buns. Well, let's pull up this. So this is a 30-minute bun chart. Let me just make this a little bit bigger. Problem is, on certain markets, you're dealing with chart chart real estate. If you're trying to put a lot of, I couldn't put a 30-minute NASDAQ chart up here that would make it readable. I'd have to tilt my monitor sideways. But, there's certain things here, like in the order flow, I'd be watching, right? So if I see at this low here in the buns this morning at 7:30, right? I've got down here 86, 95, 53. Okay, so I got a very small volume, right? This is a market that trades, in the buns, you normally have, a couple hundred aside, and it only manages to trade 86, 53, 95. So obviously it's around 730. If I spiked down there, it came right back up. It's telling me that, prices, this, I know this is a knee jerk, but um, there wasn't much interest in selling down here, right? It just sort of got down here, and maybe it was a stop got triggered here, and sort of ran through. Then the market sort of rallied back up. Now I can see that we're putting in these point of controls right around the same area in here between, um, here you got one here 75. This is also 75. 75 to 85, right? So I'm putting in this area in here. There's sort of this, I don't want to call it a range, but we're sort of bound in between this area right now. Okay, so what I'd be looking for is, obviously if we take out this low, if this area that people had rejected earlier, if price comes back down to that area and it gets accepted and blown through it, you know, I'd be, looking to the downside. I see the selling really getting stronger here in the deltas, 1697, 5,000. So I know that, people are aggressively selling into this move down. Now, bunds are going to, well, the cash market's closed right now, but, I'd be watching this, for the next day, tomorrow. Yeah, because ones will trade till later, but essentially after the cash market closes, volume really, which is about closes around 10 in Germany, 10 Chicago time. Volume just sort of is not what it is during the normal hours.
Well, I guess we had a couple of questions in the Q&A. I usually don't use that, so I didn't
Oh,
look at them.
okay.
Marcus says, very nice presentation. Thank you, Mike. And he says, a question regarding imbalances. To
Yeah.
print color imbalance number, do you look at opposite side of bar in both directions?
I generally will look at, okay, generally if it's a green bar, I'll look at the buying imbalances. If it's a red bar, I'll look at selling imbalances. Now, there's areas in bars where generally you're going to have imbalances occurring just by the nature of the bar. And so, for example, on a green bar, generally the bottom two prices, because you look at it diagonally, right? You don't look at it horizontally. So you're going to compare, for example, like this bar here at 830. You got 49 against 209. Let me make that a little bit bigger here, right? Generally on green bars, the most common place for an imbalance to appear is right here at the bottom of the bar. Like you see one here, one here, one here, one here. Just as on a red bar, it is going to appear at the top. 93 against 625, 4 against 1095, 10 against 3. Why? Is because those are the edges of the bars, and oftentimes on minute-based charts, sometimes that's where they open. It's because it's just the nature of the bar. Um, but what I find them, if I start seeing them internally in the bar and we start closing, above those areas, yeah, I'm looking at them to go higher. Just as, on green bars, selling imbalances like this 530 against 14, I don't put much weight into this one here, or this 586 against 76, or this 1018 against 14, just as I wouldn't up here. Really what I'm looking for is more in the body. And there's certain areas, like on a green bar, if I have a selling imbalance towards the bottom of the bar, to me, that's generally a very important piece of information, because it's telling me that there was, a strong passive buyer here. I'm not too concerned with the strong passive buyers at the high of the bar. Generally, your highs, you get a lot of people coming in late looking for the market to go up. But if it appears at the bottom of the bar, right, if the bar opens up, trades down, it hits a big strong area of buying, and then it rallies back up. To me, that's important. I don't know if there's one on a, like here, right, 30. This bar that says 30, right? That's what this green arrow is telling me, that you have 180 against 32. Now, granted, it's late in the day, but I know that when the market, this is at 1:30 yesterday in the bunds, like I said, not much volume going through, is generally, it's telling me there's supportive buying here. Just as I see this 207 versus 25, it's telling me there's supportive buying here. As the market came down, it ran into, some bids down here. So, there's many different ways to use that information. I'm just trying to look if there's any other examples. Not really. Not on this 30-minute Bund chart. So I hope that clears you up and doesn't confuse you more.
Okay, and then a follow-on question he had was, do you add colors only after the bar is closed?
I'm not sure what that means.
Well, like the green and the red colors for the bars, do you paint those as it's live,
Well,
as it's being
yeah,
built?
as it's live. I mean, these are just, your normal candlestick charts right here. Um, you know, some software will have the candle on the side. I like to have it in between. So I know that this is a red candle. So you can see here, obviously, if it changes, if it turns green, then, we opened up here at what, 70, we closed at 69 and three quarters or 69 and a half. So you can see as this bar, this is just your normal candlestick in between. That's what these are. Um, you know,
Right.
'cause, most people are familiar with candlesticks. It's a visual way to look at a chart, and I like to have them in between as sort of the separator, in a bar.
And Marcus also asked, how many people trade order flow in stocks?
In stocks, there are people. I mean, honestly, I'm a futures guy because I'm from Chicago. So I'd probably, out of my customer base, probably 10%. Um, as strange as it may seem, there's a lot of guys in India that use order flow trading the stock market. Um, as it's If you trade American stocks, yeah, I got it. You stick to the stocks that have the big capitalization, right? Like, I have a list, Amazon,
The high volume
yeah,
stocks.
like Apple, Facebook, AMD. I don't, Tesla is not one I look at, unfortunately. Amazon, Nvidia, Netflix. The main ones that I look at are Apple, Facebook, and AMD. So because you need volume to go through, right? And if it's one that's a bit skittish, if you look at some stocks, you could have very wide bid asks in some of them, and you're just not trading really enough volume for it to make sense. Because you're trying to understand the volume that's going through, but if it's skipping, a couple price levels, I'll say price levels, but tick levels, with not really any trades going on, then it's kind of not going to be very effective.
And then Dennis had a question, what's a typical learning path over time for a beginner?
Well, it depends on how much time you have to commit to it. If you're able to get screen time in, just to watch it. Obviously you gotta start somewhere, right? You gotta know what you're looking at. You can't just sit down in front of a footprint chart or a dome and hopefully, wait for it to click. You got to start, with a basic course at least, obviously, and just, so you know what you're looking at, right? I mean, it's like an x-ray. You go to the doctor and you get an x-ray done, the doctor holds it up. I just see my ribs in there, but oh, you see this, you see that, you see that. He's pointing out to me what's important to look at, right? You gotta go through an education of finding out, what to look at, and what's important to that's why I talk about today, those three building blocks: delta, imbalance, and point of control. Because your analysis and your learning is going to grow from those. If you don't understand delta, it's going to be a lot harder to understand max delta, min delta, cumulative delta, and sort of put the pieces together.
Right. And then Market also asked, is the code of the software available for the users to modify?
No, it's
Makes sense.
it's not like an open source thing that you can go in and modify. Honestly, if you like to play around with that, Sierra Chart, because my software runs on NinjaTrader, but Sierra Charts, if you're into coding and messing around, I'll say messing around with stuff, but playing around with that, um, get Sierra Charts. They have, it's not open source, but you could go in and sort of play around with, how you want the chart to look and do for you. I have a friend who's also into order flow. Then he started his own company. He's on Sierra Charts, but yeah, the things that he shows me sometimes, he's like, oh yeah, I was just going around playing around. I coded this thing up. I can make the chart do this and that. So um, if NinjaTrader is more of a closed environment, but Sierra Charts, if you have a background in coding and the patience, I don't have the patience for that. That's a good place to go. and it's very inexpensive relative to a lot of other softwares out there. It's you can't buy a license, but you could. It's a monthly thing, and it's just like $25 a month or something like that. Or if you have a brokerage account at some firms, they actually give it to you for free.
Oh, good. All right. Well, I think we've gone through all the questions and the chat and the Q&A, so I think we're
Okay,
good.
great.
So, Mike, thank you very much for coming. Really interesting to see.
Yeah, no
Um,
problem. It's my pleasure.
yeah, I'm sure we'll have you back in the future, but I'm glad we got the URLs sorted out so people actually joined us this time.
Yeah, yeah. It's always something. Little gremlins. It's funny because my iPhone, my web host changed something with their email server. So it's like I didn't even know. I thought it for days. I was sending out emails via my iPhone. Um,
Oh
then
no.
then it's like all of a sudden I got all these messages saying the sending part is not set up properly. I've been using the same one for how many years, and then it's like nothing's been sent for the last 3 days. So
Oops.
that's why I messaged you earlier. Make
Yeah.
sure make sure we got it. But yeah, and like I said, a great place to start is my YouTube channel. I've got a ton of videos up there. Um, with a lot of educational stuff. And if you want to go, further, just reach out to me or Tom can get reach with me, in touch with me. But yeah, I said go at your own pace. No one's putting a gun to your head telling you got to trade now. There's no race against time. Like I said, the markets have been here since the 1800s. I'm sure they'll be here for at least for
Long
another.
after we're gone.
I hope
Yep.
so. I hope so.
Yep.
So yeah. So like I said, go at your own pace. Don't feel, it's not a race against time, in that respect. So, most importantly, go at your own, people always get concerned with, I don't know how to say it. People go to Las Vegas and lose $5,000, chalk it up. Oh, I had a fun time, but then they lose $5,000 in the market and they're like, trading is rigged and all this stuff. But you haven't taken the time to actually, to learn it. You're better off rather than jumping in with both feet, go at your own pace, and understand it. I've got guys that I talk to that when I first released my software in 2015, we're still chatting today about things. Some people, sometimes, what do you think caused this? I'm looking at this order flow, and sometimes order flow doesn't give you anything to trade off of.
Right.
It's not something that's going to pick every single market turn in the market. And you just got to understand it. But really, what it does for is that there's going to be those times where it just makes perfect sense, right? And you're gonna see that because you've seen it before. It's not going to be an exact picture, but it's going to be very close to what you saw earlier. And you're going, yeah, I got it. I understand why the market did what it did at that point.
Right.
So anyway,
All right. Well, I'll put your YouTube link in the description and post it on our video, our YouTube channel as well. And yeah, hopefully people can learn more. And if they have questions, I'll forward them to you if they send them to me or
okay, great.
direct to you.
All right,
All right.
great, Tom. Thanks,
Thanks, Mike.
everyone.
All right. We'll see you.
All right, bye bye.
Bye.